Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, as we enter the final month of the year, let's take a look at the local share market and the technical cues as to what's to come. Louise Bedford from the Trading Game begins with analysis of the All Ordinaries index, which she notes has recently dropped below the 30-week moving average.
The thing that I'd love to discuss is the final two candles on the All Ords here. So this is a piercing pattern, and this is a beautiful thing because it is likely to be a reversal pattern, reversing that short-term downtrend. So that's quite a fascinating little pattern to have a look at.
Yeah, absolutely. You've got another chart for the All Ords, I believe, as well. What is that showing us?
I wanted to point out that the macro currently is off. Now, how do I define the macro? I'm looking for the All Ords to be above its moving average, and I'm looking for volatility to be low. But because the All Ords is not above its moving average, even though the volatility is low, the macro is off, which means I will not be entering any new positions this week on the Aussie market. Now, if we look at the ASX 20 chart, we can see that it's underneath its moving average. But of more specific interest is in the lower panel, we have got the RSC, the relative strength comparison, underneath its own moving average of 30 weeks. So not only is the ASX 20 cold, but let's look at the ASX 100, which should just be the next chart. Here we go, very similar look, and the next chart will show the ASX 300. All of those top areas are cold, which means we need to be looking underneath the top 300 for our opportunities if we're looking to get involved with anything for the coming week.
Well, let's now turn to commodity-related stocks, and Thomas Atkinson from FX Evolution weighs into iron ore with analysis of Fortescue's share price action.
And what we're seeing recently is a bit of a bid, and that is that price has started to improve. But we've also got a couple of other really positive signs. We have what we call a 2050 cross in the moving average world, which is the red line and the blue line there. And we also have a resistance here at around 21 kind of 50. And if we break through this, a lot of people may not be aware, but there is a seasonal approach to iron ore trades. Often we see November into December into January into earnings next year start to do better. And that's actually a run into the Chinese New Year. And it's been a pretty consistent one over a couple of years now. So yeah, I'm starting to like it from the chart perspective. Liked it for a while, and a breakout above here could be quite strong. 26 could be the next target. So things are looking better.
Energy has been among the worst performing sectors as the oil price struggles, and that has dragged on the share price of Woodside. Thomas Atkinson examines the stock's technicals.
Yeah, Woodside and energy stocks in general have been recently quite good, and then of course they've sold off as well on all of the news that's going around. I've done a little bit of marking here, a little bit of pencil marking for the viewers. So we have the left shoulder, head, and right shoulder. That's what those little write-ups mean. And basically, this is what we call a inverse head and shoulders in the technical world. So 27 is the all-important target. I think it's probably early to tell here whether oil will actually start to improve or increase. But one of the things that I always look at, if you know, when you're looking at kind of momentum in these types of charts, is breakouts. So 27 plus breakout's going to be important, and also oil barrels. And we've seen no movement in barrels other than to the downside. So I think we need both of those catalysts, but 27 is a level where we're watching here.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.